In this video, I'm going to teach you about total crypto market cap and how it relates to Bitcoin, and also how it relates to other cryptos. This is incredibly important. If you understand how to read total crypto market cap as well as Bitcoin, you're going to do incredibly well because it's kind of like a secret sauce. Understanding how structural levels intercorrelate and interconnect across the tier 1 charts is very important, and you also need to understand the tier 2 and the tier 3. For today's video, I'm just going to focus in on total crypto market cap and Bitcoin. That's all we're going to look at, and I'm going to give you some really helpful hints and tricks and tips so that you can understand with the structural levels where other cryptos are headed to. In the last session of the main markets, we saw some retracement in the S&P 500, the Nasdaq, the Dow, and the Russell. That's because the job openings just came in at a stellar rate, but across the weekend, we've seen that the probability of a rate cut has increased from 20% to 38% currently. We can also see that Fed liquidity is still increasing. Fed liquidity is really important. It supports the main markets. You can see that blue line. When the blue line is going up, the markets are going up. For these reasons, we are seeing gold futures starting to come up. We're seeing the US dollar currency index starting to come down. Yield futures starting to come down, and bond prices starting to go up. And we've seen a bit of a retracement in Bitcoin. But let's turn on the structural levels that have been released as the express indicator inside the service. We can see what's actually occurring inside Bitcoin's price action. There are two levels of structural resistance, one at 43,205 and one at 43,048. Price has been trying to get through these resistance levels and not succeeding. If it can't get above, it's going below. That is the probability, and we can see that below level is at 41,964. Bitcoin is currently trading at 42,778. When you're seeking to gauge the direction of the crypto market, it's really important to look at total crypto market cap. Don't just get caught inside your specific alts. And when we throw on the indicator, this indicator is created through the CTKS method, which is the world's most powerful smart money buy and sell level detection system. What we can see is total crypto market cap bounced from 1.566 trillion. It got above this level of resistance, but it's been stopped out around these levels. Currently, total crypto market cap is coming down to a structural support area at $1.587 trillion. It's currently $1.593 trillion. You can see a very similar thing playing out in total crypto market cap when compared to Bitcoin. Total couldn't get through this structural resistance at 1.605, and it had a higher one just up here at 1.608. These levels are important to understand. If you're looking at the market like this, you just simply don't know where the ceilings and the safety nets are. Let's pop on the indicator again. If we're looking at it like this, we know a safety net is down here and a further one is down below. We know the ceilings are up here. It's a very simple method that you can apply into the market to know where things are going. If it's not going above, it's going below. If it's not going above, it's going below. That's simple. If it gets above and stays above, it's going to the next one above. You can get rid of all your stress when it comes to trading and investing by simply knowing where the structural levels are. If you don't know where the structure is, you're just guessing. If you're guessing, you're going to lose money. One of the most important things that you can do as an investor and a trader, because all traders and investors share the same characteristics. They buy, they sell, they hold. Investors say, I don't care what price I pay, I'm just going to get in. And if that's around the top, that's okay, because I'm just going to hold on for the next 10 years. Traders are very different. They must time their entries and their exits. If you're an investor and not a trader, you're making a mistake. And if you're a trader and not an investor, you're also making a mistake. You want to combine the strengths of both approaches. You'll find that everything comes down to structural levels. We've looked at the structural levels inside total crypto market cap and Bitcoin. Why do we look at these? Because they really, really matter. Why? Because all the cryptos get their strength from total and Bitcoin. And if Bitcoin is weakening, you've got a very high probability chance that the alts are weakening too. But if Bitcoin and total crypto market cap are coming into structural support areas, you would expect that the cryptos would start to bounce. Whether you're an investor or a trader, where you buy and where you sell really, really counts. Think of this as an investor's perspective over the next 10 years. If you bought here and you sold there, that's not so good. And we're just compressing time in this case. But if you bought around here and you sold around there, well, that's a completely different return on investment. But what if the markets across the next 10 years did something like this? They went up and down and just consolidated. Or the next 10 years, they did something like this. Typically, investors can only make money when the markets are going up. When the markets stay flat, people tend to lose money. And when the markets go short or go down, people tend to lose money because people buy at spot and hold for a really long time if they're an investor. What I'm trying to do with this particular community is help you to think from an institution of one stance. Your mindset is to get really excited as price goes down. Make sure that you know where the structural levels are on the chart that you're looking at. If something is coming into really strong structural support, it is likely to bounce. But what happens when the markets just go in a consolidation stance? Consolidation can be incredibly profitable if you can time your entries and exits. You don't need to buy the bottom and sell the top. You can buy around the sweet spot and sell around the sweet spot as well. Even if the markets come down, so long as you know where the structural support is, the markets will always bounce. This is a characteristic inside markets. But people tend to get really, really concerned. If they see the market coming down, they think something like this is going to happen. Not necessarily. It's all about the structure that underpins market structure. Inside markets, things are weighted towards probabilities. Probabilities are not certainties. If you've got 100% probability, that's a certainty. But inside financial markets, it's rarely a certainty. It's just a probability. And when we look at the wave-like action, we can see the price is coming down and going up, coming down, going up. It's just moving in a wave function. But something really important to understand, as Bitcoin goes, so too does 99% of the crypto market. If Bitcoin is coming down, you can be pretty much assured that everything is coming down with it. I'll give you an idea of what I mean. You can see that Bitcoin is coming down like this. What is Ethereum doing? It's coming down like that. What about Solana? It's coming down like that. What about Binance Coin? Oh, interesting. What about XRP? Yep. What about ADA? Oh, okay. What about AVAX? Oh, it's coming down as well. What about Doge? It's coming down as well. But unfortunately, less than 5% of people inside the crypto market even bother to look at Bitcoin. And how does Bitcoin move in respect to total crypto market cap? They're like really good mates. They hang out together. If you don't know or don't look at total crypto market cap, but you look at Bitcoin, you're still making a mistake. You need to look at the structural levels on Bitcoin and the structural levels on total. That is, in order to trade any other crypto, you can see just how much this price action on Bitcoin is influencing this price action on Solana. You might say, Ken, I don't want Solana. I want to be in XRP. Well, you can see the same thing. What about ADA? Same thing again. Your key is to look at total crypto market cap and then Bitcoin. We know that Bitcoin is coming into a level of structural support. Let's just go and have a look at that as the market comes down. We can see on a 2-hour basis that Bitcoin is trying to get down to this lower level of structural support. When it gets there, it's likely to bounce up. And this is why we need to know structure. Have a look at this. Look at when it came down. What did it do? It just hung around there for a bit and came straight back up into these levels of resistance. When you have levels of resistance, you must pay attention. If you don't know the levels of support, the safety nets, you don't know the ceilings, you're in enormous trouble. And if you would like this indicator, you can get it from ctksmethod.org. We know that we can't just look at Bitcoin. We also need to look at total. And we've seen that total has broken through that level of structural support. It's targeting the level below it, this level back here. Now, how does that relate back to Bitcoin? I'll teach you a little bit about how to cross-analyze and cross-compare structural levels. Let's have a look at Bitcoin again. When we see this particular price analysis playing out, what are we looking at? We're witnessing that Bitcoin is trying to make a beeline down to this structural support level. That's where it's heading. And what do we see? All of this accumulation from the start of February. Let's go back to total. Where was that accumulation? When it comes to total crypto market cap, we can see this level of support coincides exactly as it did with Bitcoin. If this support structure does not hold and the bears get in control, they'll seek to push it down here. You can see it visually. It's just down here around this area. If the bears just get taken out by the bulls, they'll seek to push it up to these levels here. Just keep these areas in mind. The question now is, how do we apply that? We've looked at this particular area on Bitcoin, around that $42,000 mark. If the same thing plays out and Bitcoin comes down to a structural support level around that 42,000, we would expect that Ethereum to come down to about 2250. What about Solana? We would expect around that 93, 94 mark. What about BNB? And BNB is looking quite interesting, isn't it? Look at all of this particular price action. But we would anticipate BNB to come down to around 297. What about XRP? Around 49.30. ADA around 48.80. AVAX around 32.50. And what about Doge? We would expect it to come down. Wow, it's really come down pretty harsh. We would expect it to come down to around 77.40. But this is the way that we apply structural levels. But you must know where they are, or you can't predict and can't estimate where anything is going. You can only guess. This is a powerful methodology to apply as soon as you understand where the structural levels are. You're already ahead of 95% of people because you expect structure to interact around that 42,000 mark. It could come down a little bit lower. That'd be perfectly fine, because what you see with structure, it's not a brick wall. It just doesn't stop. It gets wicks underneath that area. And this is the same as structural resistance as well. You get wicks above that area, but you need to trade consistently above the area in order to make it real. What is happening with Bitcoin right now is that the total crypto market cap structural level is playing itself into Bitcoin's price action. That's why we've had this big reversal, because we have structure on total crypto. What do I mean by that? You can see this structural level playing in here. It's incredibly real. When you understand what structure does and how it interacts, it's just an absolute game changer. Instead of guessing, you know what's going on. If it can't get above, it's going below. And if it goes below, it's going to the next one. But if it does get above, it's coming back to the one above. And of course, you can zoom out on structural levels to get a better overall picture of where things are going. In this example, we just looked at total crypto market cap, which is total, and also Bitcoin. Understanding these structural levels is an absolute game changer. You must also understand how the Tier 1 and Tier 2 and Tier 3 charts all intercorrelate and interconnect together. You can do that through the cheat sheet. But it's much more important to just understand where the structure is across all of these different charts. At the moment, we're only looking at the crypto space. Total and Bitcoin are enough to get you started. Just think about baby steps. In order to understand any specific crypto project, you need to understand the structural levels on Total, the structural levels on Bitcoin, before you turn to the structural levels on whatever it is that you're trading or investing in. One thing that you don't want to do, you don't want to buy high and sell low. Where you buy is vitally important. If you buy around the sweet spots and you sell around the sweet spots, you're going to do incredibly well. And it doesn't matter what the market is. Price is always moving in a wave, and you can take advantage of that every single time. It doesn't matter if the market is going down, the market is going up, or the market is going sideways. You can do very well, but you must know your structural levels. Unfortunately, what occurs is that people seeing any kind of a downturn just automatically think the markets are going to go to zero. They run away from the market and they get really angry with themselves. This is normal until it's not normal. And what I mean by that, when you understand structure, you understand that the markets come down into structure. They hit that structure and they rebound from structure. You just want to focus on structure. You'll find a lot of times when you look at the news, it'll just freak you out completely. Instead, focus on structure, such as Total and Bitcoin. If you're trading, for example, Solana or ADA or XRP or whatever you're trading inside the crypto market, that's important to do. Always start with the structural levels, Total first, Bitcoin second, and your beloved alt third. If you pop across to ctksmethod.org, you can pick up TradingView indicators for the structural levels on the Tier 1 charts, the Tier 2 charts, and the Tier 3 charts. You're going to find it an absolute game changer. Also, don't be concerned about negative price momentum. That just gets you on the right side of the trade. A lot of people are taught, and I don't know who buy, but it's just a common thing inside markets. If the price is going down, just run like hell. And if the price is going up, run like hell and buy at higher prices. Instead, you want to invert that thinking, but the only way you can do it is to understand the structural levels first on what you're looking at, and then how they apply into other particular cryptos or commodities or indices or stocks. If you have any questions on structural levels, or you'd like me to help you out with something, please let me know in the comments. And if you find the structural levels helpful, please let me know that as well. When you have the skill of cross-comparing structural levels, it's an absolute game changer. I hope this video has helped out. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again tomorrow. Bye for now.